Houston, we may have a problem. We have two US banks that just collapsed. And what is this going to do for the real estate market? Stay tuned as I break this down for you on this week's reaction video. As we're heading right into prime spring market right now, if you are looking for some help on how to navigate this real estate market, whether they're buying, selling, or investing, or a lot of what our clients doing right now are just moving and upgrading their condo to a freehold home, you could book a call to work with me, and you'll be me on the other side chatting with you to kind of see what your personal situation is. And you can do that by going to the link right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name's Zhen, and I run and operate a RE/MAX in the Greater Toronto area. And if you enjoy a lot of the content I put up, make sure to help me spread the knowledge by smashing the like button and subscribing to the Prime Properties channel. Now, the article that we'll be reviewing today is actually a multitude of them, but it's all revolving around basically two US banks that are basically collapsing right now. Now, we have here Silicone Valley Bank's Toronto branch seized by Canada's banking regulator amid collapse. So if you guys aren't following what has happened, essentially last week, there was a bank run and a lot of people are trying to withdraw their money. That's kind of what it is. And the banks didn't have enough money to give it back to all the people who deposited money. So there's not some kind of investment. It's just basically the banks, as you know, they basically hypothecate, which is just a fancy term for saying they lend out the deposit that they have. It's like 1 to whatever times the ratio, up to like 27 times that dollar you deposit. And they make the money, the spread on the interest rates and that they have, and they can lend out, right? But what happens is when all the money is, needed to be withdrawn from people who put money in, the depositors, they don't have enough money because it may be tied up in something, and that's when you have something bank run. If you are basically a 90s babies or boomers or watch Simpsons, here's a clip of basically exactly what has happened.
What do you mean the bank is out of money?
Insolvent? You only have enough cash for the next 3 customers! Hey,
So there was a saving grace that towards the weekend, basically the US said that people's money is going to be safe and it's going to be, rest assured it's going to provide back to kind of give a little bit of a stabilization to the economic world. And the reason why all of this is important for kind of the Toronto real estate market is we've always been saying the central banks, whether it be the Federal Reserve, which is the US Bank of Canada, or the Bank of Canada, will continue hiking interest rates when and if they can, as much as they can, until something breaks. The banks going under is potentially something breaking. But one of the big time factors that we're seeing happen right now is that the 5-year bond market is actually plummeting. And why that is important is because the 5-year bond market is tied into the fixed rate mortgage. So I'm going to show you what the 5-year bond market looks like as of Monday. Now today is Tuesday as I'm shooting this, and maybe the banks will announce some kind of rate cut or some kind of rate announcement. But you can see here, basically it was at 3.5 and it went all the way down to like 2.9. So that's like a 60 something basis point plummet. You can see it's a really steep drop, and they haven't seen this since the 1980s. So they're saying that this, again, I don't want to put words in people's mouth, but basically they're saying this is like a Lehman Brothers moment. I personally don't think so, but what kind of side effect this may have on the real estate market is the fact that if the 5-year bond continues to go downwards, and a lot of the bank stocks are also down too, then there's a chance that the fixed rate mortgages could also come down. So listen up. If you are a buyer, I would pay attention to what's going on right now and follow the banks, like the Canadian banks, and what their fixed rate is. If they keep dropping it, I would highly encourage you to go get a rate hold at whatever that rate is. So as a moment right now, a lot of our clients who are buying have a rate hold of like 4.8 and 4.9 from January, kind of when the rate plummets over here. Obviously it climbed back up, but now it may be dropping lower. Again, we don't control what the fixed rate mortgages are. It's not kind of like the Bank of Canada overnight rate, where if it goes up 25 basis points, the variable goes up 25 basis points. The banks can still pick their spread, but basically right now, the money in which they're borrowing from to lend out as mortgage just got cheaper. Whether they pass on that discount to try to gain a larger market share during spring market, that's to be seen right now. That's what I'm saying. As a buyer, I would focus on this story that's happening right now. And if you do see bank interest rates come down, you may want to get a rate hold that lasts for 90 days. Now, what does this mean for the real estate market? There's certain segments of the market that has already been heating up, like we've been talking about the past little bit. And basically what's happening right now is if there's any more like stimulation on the market while we have no inventory, it's not going to be good. Now, at the current time of shooting, it is basically March break, and we should, keyword, should be seeing more inventory Monday, Tuesday, Wednesday after March break as people kind of get their house ready for sale after March break. If we do not see a surge in inventory and these rates come down, we'll probably see more demand than there is supply, which is kind of continuation of what's been happening. So I'm gonna put up a chart over here basically showing you how the new listings have been coming out in the last little bit. Yeah, one of the weeks went up 10%, then a flat line. So the March inventory right now for new listings isn't looking that great. So things are still selling in multiple offers if you're on the low rise, especially 3 bedrooms. Condos are moving a little bit faster right now. And by no means is this back to like a crazy 2022, like, February, January market, but it is increasing, having that seasonality bump. But the problem is we're not getting the inventory. And if we're seeing this kind of like side effect of the economy, call it, breaking, then we may have some problems because we don't have enough inventory and we just made more demand by making the rates lower. Now, a secondary thing that may come up is the 5-year bond is actually a prediction of where the overnight Bank of Canada rates are. And at the moment right now, there's a lot of chatter and everything, but they're saying that because of all this, there is a chance that maybe there are now rate cuts or the rate holds. So what's going to happen is if there are, for whatever reasons, rate cuts this year, and I don't personally think so before all of this, but if there are rate cuts this year, it's going to basically save a lot of people who are maybe like distressed, or maybe they're feeling it on the Scotia or the National Bank side, and then their mortgages may actually come down. Again, this is all just like things that could happen. It's all still happening in real time right now because this could be a very big moment in kind of where the economy is. Next week, the US Federal Reserve will announce whether they actually raise the interest rate. They've been saying that they're going to raise 50, right? Sometimes like swing 25, but given what has just happened, it's going to be an interesting March. Let's just leave it at that. Yeah, it's going to be a very, very interesting March. Anyways, hope you found this helpful. It's not necessarily like directly real estate related, but it's a very big economic shift in what's happening in the monetary system right now. And hopefully this gives you an idea of how this will affect the real estate market and you for someone who's trying to transact in the real estate market. If you're looking for some help on how to navigate this real estate market, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.